Welcome back to Ticker Shock. This week, stocks pushed higher, small caps had a major breakout, Bitcoin rallied, oil dropped hard, gold stayed in focus, housing stocks surprised investors. We're going to break down the biggest market moves of the week, what they mean for investors, and what could matter going into next week. Let's get into it. Starting with the market scoreboard, the S&P 500 finished the week slightly higher with SPY up about 0.4%. The Nasdaq 100 had a stronger week with QQQ gaining about 1.6%, showing that tech stocks are still holding up strong. But the big move came from the small caps. IWM, which tracks the Russell 2000, jumped nearly 4.8% this week. That's important because small caps usually do better when investors feel more confident about the economy, lower rates, and future growth. So the big takeaway here is simple. Large caps were steady, tech stayed strong, but small caps were the real winner this week. Next up is interest rates. For this segment, we are watching TLT, the long-term Treasury bond ETF. TLT gained about 0.7% this week. Usually when TLT moves higher, that can mean bond prices are rising and yields are cooling off. That matters because lower yields can help support stocks, especially growth stocks in rate-sensitive areas like housing. Investors are still watching the Federal Reserve closely because any shift in rate cuts expectations can move the entire market. The big takeaway, rates are still one of the most important market drivers, and even small moves in bonds can impact stocks. Now let's talk oil. USO, which tracks oil, fell sharply this week, dropping around 6.7%. That's a big move. Oil came under pressure as tensions around Iran appeared to ease. Investors started focusing more on demand concerns. Lower oil prices can be good for inflation because cheaper energy can reduce pressure on transportation, businesses, and consumers. But it can also hurt energy stocks if investors think oil demand is weakening. So the big takeaway, oil dropped harder this week, and if that continues, it could help inflation, but it may also signal concerns about global demand. Now moving to gold. Gold has been one of the biggest stories this year, but this week it pulled back. Gold was down around 2.9% on the week, although gold still remains near elevated levels compared to where it was earlier in the year. Gold usually moves when investors are worried about inflation, the dollar, interest rates, or geopolitical risk. This week, easing geopolitical concerns and stronger risk-on mood likely took some pressure off gold. But I would not ignore gold just because it had one down week. The big takeaway, gold cooled off this week, but it still remains an important signal for inflation fears, safety, demand, and global uncertainty. Next up is Bitcoin. Bitcoin had a strong week, gaining nearly 6%. That's a big risk on signal. When Bitcoin rallies, it usually tells us investors are more comfortable taking risks, especially in speculative assets. Bitcoin is also being watched more closely now because of ETF flows and growing institutional interest. Even if you don't invest in crypto, Bitcoin has also become a major sentiment indicator. The big takeaway, Bitcoin shows strength this week, and this adds to the idea that investors were willing to take more risk. Now let's look at the housing. ITV, the home construction ETF, jumped over 5% this week. This is a major move for housing stocks. This matters because housing is one of the most important parts of the economy. Home builders are heavily tied to mortgage rate, buyer demand, affordability, and inventory levels. Even with affordability still through the roof for a lot of buyers, home builder stocks continue to show strength. Part of that comes from limited housing supplies because if there aren't enough existing homes for sale, buyers may turn to construction. The big takeaway, housing stocks had a very strong week, and the market is still showing confidence in home builders despite affordability concerns. The biggest story of the week may have been SpaceX. Shares surged following reports that the company could be valued above $2 trillion. Investors continue to bet on the long-term potential of the Falcon 9 launches, Starlink growth, and the future of Starship. While the valuation remains controversial, SpaceX continues to dominate the commercial launch industry and remains one of the most closely watched companies. Personally, to say it's controversial is a bit of an understatement to me. The valuation on this thing is insane. My personal recommendation is everybody be very careful. I don't see the valuation holding. For a internet company, I understand the space industry is going to be or could be a big potential future investment, but current evaluation just doesn't match what I'm seeing. But that's just my personal opinion. This is not financial advice by any means. So invest on your own accord. However, Falcon 9 continues setting launch records, and while Starship development continues, investors are focused on long-term potential to dramatically reduce costs. So if all that works, the valuation might be justified, but the question remains, how long will it take, and how expensive is this going to get? Next up, we got two of our biggest earnings report that released last week. We have Oracle coming in, who delivered one of the strongest earnings reports of the week. Revenue climbed to roughly $19 billion. Adjusted earnings per share reached $2.11. Cloud revenue surged as demand for AI infrastructure continued accelerating. Management also issued strong guidance, reinforcing investors' confidence in the AI spending cycle. And next up, we have Adobe. Adobe also posted a strong quarter. Revenue rose to $6.62 billion. Adjusted earnings per share came in at $5.96. The company raised guidance and reported AI-related recurring revenue exceeding $500 million. Despite concerns around AI competition, Adobe continues proving it can monetize generative AI products. Now, looking ahead, investors will be watching several important earnings reports next week. Accenture reports on June 18th, Kroger reports on June 18th as well, Jabil reports on June 17th, CarMax reports on June 17th, and La-Z-Boy reports on June 16th. We'll also continue monitoring SpaceX development, oil markets, geopolitical headlines, Bitcoin, housing, and overall market momentum. If you found this recap helpful, make sure you like, subscribe, and turn on notifications so you never miss market moving stories. Thanks for watching Ticker Shock. Tune in next week.